Hey everyone, me Kevin here. If you've ever bought stock on the trading platform Robinhood, or if you've ever been interested in even owning stocks, or maybe you own some stocks in another company like even Webull or TD Ameritrade, and maybe you use Robinhood to follow some trends, there's something extremely important that I want to show you. And when I show you this, what I show you has the potential of saving you hundreds of thousands of dollars over your lifetime if you plan to continue to be an investor. This is somewhat coming from something very complicated, but in this video I'm going to make this as simple as possible. But I do want to give you that disclaimer up front because I encourage you to watch the video all the way through. This time, and I rarely say this, I wouldn't skip around in this video because it all builds on everything. And this is big. I mean, this is probably one of the biggest things that I could possibly put out as a bombshell in the stock market. So let's get into this. And if you're interested in this, sit tight, okay? Buckle up. But first, let me just make a quick note with Thor's hammer here. Make sure to get your life insurance in the link down below. And if you want 2 free stocks, especially since a bunch of people are about to lose a bunch of money, make sure to use the link down below for Webull to get 2 free stocks when you deposit just $100. Remember, deposit $100 with Webull and get 2 free stocks worth up to $1,400 and that life insurance. Okay, all that said, here's the scoop. How many of you have heard about the SEC? Well, probably many of you, and you're like, seriously, Kevin, you're gonna bore me? Nope. Hold on. The Security and Exchange Commission, we've heard of them before. Okay, that's good. Probably most of us. I'm guessing, 80% plus of us have heard about the SEC, or at least we knew there was some regulatory body for stocks, right? Okay, hold that thought. How many of you have heard about an SPAC? How about a PIPE in relation to stocks? My guess is probably 2% of you have heard about those things, and that's okay. That's not to make you feel bad, but it serves a really big purpose for what we're about to talk about. An SPAC is a special purpose acquisition company. Sounds complicated, right? Almost as complicated as a PIPE. A PIPE is a private investment into public equity. Like, oh God, Kevin, seriously? Is this gonna be one of those videos where I just pass out at the end because it's so complicated? No. Let's go to the simple stuff, but keep those things in mind because it's going to become very relevant. Okay, here we go. First thing I want to do is pop open Robinhood. So let's go ahead and change angles here. Let's get Robinhood up on screen. Here we go. We've got Robinhood. Under the search tab, there's this little section called Top Movers. And this Top Movers section gives us all a heads up as to which stocks are having the biggest swings, upwards or downwards. For example, here's the bankrupt company Hertz. Oh, look, it's up 28.64%. Well, that almost kind of makes me want to go buy some Hertz because if it's up 28.6%, it must be a good company, right? Yeah, well, it's also a company that filed bankruptcy, and this is not a video about Hertz. But what's fascinating is when a stock shows up on this top mover section, a lot of people tend to add that stock to their Robinhood portfolio. In fact, take a look at this research right here that actually shows you how many people do just that. Robinhood had about 2,713 people who owned or held shares in Hertz as of March 16th. Well, Hertz then frequently showed up on this Top Movers trending tab on Robinhood. And that was March 16th. Now over here on June 12th, we have 170,700 people holding shares of Hertz in their Robinhood platform. That is, over 170,000 people own shares in a bankrupt company with the Robinhood app. Okay, that's fine. But what's the interesting takeaway from this is the run-up after Hertz shows up on the trending page. What's another example of this? And then don't worry, we're starting off slow, but we're getting to some big bombshells here. Hold on, and it's not these charts. This is the basic groundwork we're going through. Look at this, Nikola. As of June 4th, we have 9,200 people who bought into Nikola. That's June 4th, Nikola Motors, right? Is it the next Tesla? And don't worry, this video is not to try to bag on Nikola or bag on Hertz or whatever. No, that's been done too many times before, okay? Hold on, here we go. 137,000 users now hold Nikola as of June 11th. Which means we've literally seen this skyrocketing of people holding Nikola shares in the Robinhood platform after, guess what? Nikola showed up on the trending tab multiple times on the Robinhood app. Okay, interesting. So basically, there's this relation between a lot of people on Robinhood getting into a stock, maybe because it's on the trending tab. We don't know that for sure, but we're kind of connecting dots here, right? Because there's a lot of thinking that says, well, come on, Robinhood's not like a huge community, right? I mean, it's not like not like all the hedge funds in the world and all these institutional investors, and certainly not as big as like a TD Ameritrade or Schwab. And I mean, no skin off, like not trying to bag on Robinhood. They're great and they're growing. But I mean, come on, how much impact could Robinhood investors have on the stock market, right? Okay. Well, we need a little bit more information to determine that. So let's think for a moment. We saw that people in Nikola, the people holding Nikola shares went from 9,200 to 137,000 over the course of a few days. Over those same few days, Trevor, the CEO, well, former CEO and founder of Nikola, mentioned that 300,000 new investors into Nikola Motors had been buying their shares, which means it's quite possible that over 35% of people who have been buying Nikola shares, based on what Trevor said, are actually using Robinhood. Wait, that's actually a lot, okay? Well, here's the big problem. And you can't really fault Robinhood for this, but we're gonna bring it up because it is a big issue. All right, but who cares? What's the problem with that? Maybe Robinhood users see something the rest of the world doesn't. You know, this is a great opportunity. It's a company with great growth prospects. It's got a massive market cap, bigger than Ford. I mean, why would you not buy into Nikola Motors? Well, we're not gonna talk again about hydrogen or the semi-trucks or all that stuff in this video. We're talking about Robinhood in this video. And the problem with Robinhood's trending tab is that it could lead to a frenzy of buying without a care for any of the fundamentals of the actual value of the company or the real growth prospects for the company. Now, not that big of a deal, right? I mean, come on, let's be real. How many of us, when we go to buy Apple stock or Tesla stock, actually go to the SEC's website and pull up the earnings report? Most of us don't, right? Let's just be real. It's totally fair to say that. But those are also very established companies, right? They're not in bankruptcy and they didn't just IPO. Okay, I mean, that's fair. So let's keep going for a second with Nikola and see what Nikola has to do with how terribly dangerous that trending tab is. Let's dig deep because we're about to see some crazy bombshells that I've never seen before in the stock market. The easiest way to start with this is by talking about some red flags. In order to pull up some red flags, it's helpful to look at a few charts. So let's go ahead and pull those things up. Okay, here we go. The first chart is that Nikola, obviously, it was selling for around $21 a share, and then it's had its run up. You know, it sold for in the mid 30s, and then it shot up to the 60s, and then it shot up to $78 or $79. In after hours, it went up to $90, and right now it's selling for $64 a share. Okay, $64 a share, maybe that's reasonable, you know, the company's growing, it's a growth company. Hey, a lot of people just doubled their money. Some people even tripled their money, right? Fine, fair, true. But what's this? And this is, promise you, this is just one of the red flags. This is why this video is gonna be a bombshell, at least in my opinion. This is big. So this is just one part of this. This is something called a Nikola warrant. Okay, well, what does that even mean? Look, it's selling for $22.75. Well, a Nikola warrant allows you to, 5 years from now, buy one share of Nikola at a cost of $11.50. Okay, so what that means is 5 years from now, if I buy one Nikola warrant for $22.75, I will pay an additional $11.50, and I will be the rightful owner of one share of Nikola for $34.25. That makes sense, right? But wait a minute. Why is the share price today $64? Usually when you have warrants like this, the warrants would be selling for somewhere around $53. Right? Because then $53, you add the $11 in, you're basically at 64. There'd be this parity in the market. They'd be similar in price. Why is there such a big difference here? Is this like a sudden crazy opportunity to arbitrage this stock and make money where nobody else is seeing it? This is instead what I call a big fat red flag. So that we're gonna call red flag number one. Well, that's just number one. Let's get into some more red flags, and then let's put the pieces of the puzzle together. Because so far, that's interesting. Like, if that hasn't piqued your interest, that you could basically buy this warrant for like $30 off the actual value, then you obviously don't care about money. Because the bottom line of that red flag right there is, for some reason, Nikola shares are $30 more per share than what you could pay if you were just buying the warrants. Oh, fun fact, you can't buy the warrants on Robinhood. Interesting. Keep that in mind. Thanks, Robinhood. Red flag number 2. Let's say I wanted to short Tesla stock. That is, I thought Tesla was going to decline in value. And let's say I was right. But not only was I right, let's say the company dropped 50% in value. And let's say I shorted the company with 3,000 shares. I bought 30 put options on Tesla, which basically meant I shorted 3,000 shares worth of Tesla. And then I was right. By August, the company had fallen 50% in value. Well, guess how much money I would make net after option fees if I was right that Tesla is going to decline by August 50%. If I did that with 3,000 shares, I would make $1 million in profit. That's pretty crazy, right? But it's also pretty crazy to think that somebody would be crazy enough to actually make a bet that Tesla is going to be 50% cheaper in August. I mean, let's be real. It's June, July, August, that's 2 months. In 2 months and a week, I would guess that Tesla's gonna go down 50% in value. I mean, something crazy would have to happen. And then in that case, if I made that bet, I would deserve to get rewarded with $1 million, right? Well, let's say I wanna do the same exact thing with Nikola, and I short the company 3,000 shares. That means if the company's value or the share value goes from $60 to $30, I would have been right. The company would have gone down 50% in value. And I should make money, like in the Tesla example, right? Well, $3,000 or 3,000 shares times a $30 decline in the share price means I would make around $90,000. That sounds good, but I gotta pay for the option, right? What would the option cost me? That is, if I'm right and the company declines 50% in value. Well, with Tesla, I made $1 million. Here, I'd make $90,000 minus the option fees, and the option fees for that contract are $106,000, which means I would lose $16,200 if I'm right that Nikola goes down 50% by August 21st. That, my friends, is red flag number 2. Stand by, it gets way worse. Number 3. Remember when Nikola went up to $70 to $80 per share and $90 per share overnight? Why do you think Nikola, a growing company, didn't do what Moderna did, the drug manufacturer, when their company's stock value skyrocketed? Moderna instantly sold shares so they could put more money into their pocket at a high valuation. Makes sense. A company developing a new drug might need some new cash. Nikola, they could probably use some cash to build the hydrogen infrastructure they're trying to build, right? They didn't do that. Keep this in mind. It's not going to make complete sense yet, but this is red flag number 3, and you're going to see exactly why. Because you might be thinking to yourselves, well, they don't need to sell any shares. They're Nikola. They're the best. That's fine. And I'm not here to argue with that opinion. It's totally fine. But there's actually a more dark reason why they didn't, in my opinion. It's just my opinion as some dude on YouTube. So that's red flag number 3. Might not seem like that big of a deal yet, but stand by. Red flag number 4. According to the SEC, Nikola has approximately 360 million shares outstanding. In fact, I could show you exactly what the SEC says about the shares outstanding. So we have 360 million shares of Nikola outstanding. Guess how many of those actually publicly trade? Well, here it is. Public shareholders will own 23 million shares. Wait a minute. 23 million divided by 360 million. Wait, what? Yes. Only 6.4% of the total shares outstanding are actually trading. And 30 to 40% of the people who were trading and buying Nikola, of those 300,000 new account holders that Trevor mentioned, are using Robinhood. So basically, a huge amount of people on Robinhood are trading a proportionately tiny portion of the outstanding stocks at the Nikola Corporation. Wait, why are only 6.4% of the total shares outstanding in Nikola? That's weird. Now, in case you're wondering why it says here current Nikola shareholders will own 276 million shares, what that means or refers to can actually be seen right here on this filing, where you see that basically people like Trevor Milton, Mark Russell, Kim Brady, all these people, they own almost 200 million shares, plus these other companies here. So a lot of the shares that are outstanding are not in the public hands right now. Instead, what's really in the public hands is basically what they bluntly say here in this report. And this is from May 8th. The public stockholders will own 23 million shares. Okay, got it. So the public has access to the 23 million shares. Because on some websites like the Wall Street Journal or MarketWatch, you can see that the public float is higher, like around 153 million shares, which is interesting. So if you've got commentary on that, I'd love to hear it in the comments. But it's something to pay attention to. In the SEC filing, we see 23 million shares of Vecto IQ common stock representing 6.4%. And that has obviously now been renamed NKLA, Nikola. All right, let's keep that in mind. So we've got a very, very small percentage that the public actually currently has access to. Let's keep moving on. So now we've got some real red flags out of the way. We talked about those warrants that are totally mispriced for some odd reason. We talked about the fact that it's really expensive to short the company right now. And usually that's because a lot of institutions are shorting the company. That is, a lot of smart people are shorting the company. That's a red flag. We talked about Nikola not raising money when the stock was at all-time highs. And we talked about the fact that the public only currently has access to 23 million shares, being somewhat of a red flag, especially when Robinhood traders seem to be representing around 30 to 40% of the new buyers of the company. Now let's talk about the bombshell, but I want to be very, very clear. I'm a dude on YouTube. I could be missing something very important here. I don't know. But if you use Robinhood and you use or buy Nikola shares, what I'm sharing with you, if it's something that you haven't seen or noticed before, it should be a red flag as to why you want to be very careful using that Robinhood trending tab, because there are so many weird things that could happen with these companies that just IPO'd, with these speculative companies that skyrocket up and down 100% in a day. There are usually a lot of things that we don't understand that are going on. So I want to make this very clear before I drop the bombshell. I do not know everything that's going on. I don't understand everything as well as I should. This is why I do not own any Nikola shares. This is also why I am not shorting the company. Even after what I'm about to show you, I am not shorting the company because I just don't know enough. But this is to say that you've got to be careful with the Robinhood, because watch what you could potentially be getting exposed to. Are you ready for it? Let's go. On May 8th, Nikola registered their prospectus with the Security and Exchange Commission. Remember I asked you earlier what an SPAC is and what a PIPE is? Well, Vecto IQ was an SPAC, and they created 52.5 million shares known as PIPE shares, right? Private investments into public equity. Complicated, right? All you really got to know right now is that there are 52.5 million shares that were bought for $10 a share in Nikola. And this is all really complicated hedge fund crap. This is like the rich people invest in this stuff, and it makes a lot more sense to them, right? But we know that 52.5 million PIPE shares were sold at $10 per share. Okay. Well, that's interesting, because if we now pull this page up in the SEC report, we'll actually see that reference. This is from the May 8th filing. And take a look at what happens with this. All right, so here we go. This all looks pretty boring, right? Like, who's the crazy guy that would actually go through and read all this? Well, certainly not any of us using Robinhood. Here we go. Let's read you this part right here. Vecto IQ agrees to sell to the subscribers 52.5 million shares of Vecto IQ common stock, which is now Nikola, right? Known as PIPE shares, that's what I explained to you, for a price of $10 per share with a total price of $525 million. 10 times 52.5. That makes sense, okay. Well, following the agreement that exists, the company, which is now Nikola, agrees that within 45 days after they basically IPO, the proposed transaction, okay, basically the IPO, 45 days thereafter, the company agrees to register a statement registering the resale of these PIPE shares through something known as a resale registration statement. I told you this would get complicated, but don't worry, I'm gonna simplify this exactly what this means. So basically, 45 days after May 8th, Vecto IQ, now Nikola, agrees to register the resale of 52.5 million shares of Nikola. So now, simply put, this means that Nikola, by June 20th, which is that 45-day mark, will register an additional 52.5 million shares that are now available for sale. So let's now think about that for a moment. If you're a PIPE investor, that is, you're somebody who somehow had access to the PIPE, right? This private investment. And you bought these Nikola shares, which were then called Vecto IQ shares that are now Nikola shares. You bought them at $10 a share. So think about that, okay? Like, really picture yourself. Like, get your life insurance and Weeble hammer and go, okay, Kevin, all right, I'm listening now. Like, you lost me with that black and white crap, but okay, I got it, okay. So I bought a share of Nikola at $10, okay. Well, it's now trading for $60, which means your $10 turned into $60, which means you 6x'd your money. Oh, man, I'm feeling really good about myself then. Well, what if about when it was at $70 or $80 or $90 in after hours? How do you think you're feeling about a company that has no revenue, a fledgling company with a market cap bigger than Ford, and an enterprise value a fraction of what the market is valuing it at? And you own a bunch of PIPE shares, yet you're up like 5 to 6 to 7 to 8x. Well, heck, you're probably like, get me the heck out of here. Like, let me sell. Heck, you know what? I'd be happy to dump these shares at $30 a share because I've tripled my money. You know what? I'll not be greedy. I'll dump these shares at $20 a share because I've doubled my money. I'm still a hero. Even if I sell my PIPE shares at $20 a share and the company's selling for $64 or $60, whatever it is now, I'm still a hero. So what happens when the SEC approves that resale registration statement? The PIPE investors have the right to sell. 52.5 million shares now have the option of flooding the market, which, let me qualify this and say, look, that doesn't mean they're all going to sell. But if they do, Nikola's share price is in for some really bad news. But folks, if right now the public only has access to 6.4% of all of the shares that exist for Nikola, and all of a sudden you have this PIPE investment group, which is coming out with 52.5 million shares. In fact, it was right here. I didn't point it out to you earlier, but it's right here. The PIPE investors will own 52.5 million shares. You're all of a sudden potentially saying to the SEC, hey, we're gonna make this 14.6% public, which used to be 6.4%. So now all of a sudden we are 2.5xing the amount of shares that are available to the public. It's not very good. Wait a second. This means we can actually put the dots together now. And I could still be wrong about this, okay? I get excited about things and then I'm wrong. I want you to make your own conclusion. You have to put the pieces of the puzzle together. But if I were gonna put the pieces of the puzzle together, wait a minute. Why is it that you could buy warrants for such a discount right now? Because the stock ain't gonna be selling for $60 anymore very soon. That's jaded, but that answers why there's such a big spread in those warrants right now, okay. But what about the shorts? Why is it so expensive to short the company? Oh crap, because the hedge funds have already priced in that this stock is way overvalued and every Robinhood investor who's buying off the trending tab's about to get screwed. Oh, that's not good. Okay, well, what about the fact that the company's share price went up to $70 to $80 or $90 and the company didn't sell? Remember I told you that wasn't really clear, that red flag number 3? Like, why wouldn't the company sell and raise money? Because PIPE investors are people you want to do business with again in the future. And remember how we did this analogy where I'm sitting here with the hammer and I'm like, I'm up like 6x, I'm up like 7x, this is awesome. How would you feel if you're that guy who's up 6x and you're like, by June 20th, I get to take my profit? Well, Nikola, what the heck? You guys dumping shares on the market before us? We're the ones who put you on the map, and you're gonna dump shares before we can? Man, we ain't doing business with you again. Think about it. The pipe investors gotta get out first. Nikola can't give them the big fat middle finger. Red flag number 4. The fact that only 23 million of the 360 million shares are actually available for trading right now. And given the fact that Robinhood puts it on their trending tab and all of a sudden you get 130,000 accounts, not shares, accounts, that now hold a ton of Nikola shares, Robinhood is disproportionately suggesting via the trending tab that people fly into companies like Hertz that are bankrupt and companies like Nikola. And again, you can't really blame Robinhood here. This is a warning for you as a user of Robinhood, because did Robinhood tell you about this? Did Robinhood tell you that 52.5 million pipe investors could potentially dump their shares? Now, they might not. This doesn't mean there's a guarantee that the share price is going to fall, but 52.5 million shares is a lot of shares. At a strike price of $10, you got happy people selling the stock, even if it's at $15 a share. You got unhappy people if it's below $10 a share, which I will say, I talked to my buddy Jeremy at Financial Education. He's like, hey, I'd buy it under $10. You know what? Those pipe investors probably would buy it under $10 as well, because they'd been buying it for $10. But anything over 10, pure profit. So holy smokers, guys, this is something to pay attention to. This, to me, is the big warning as to why you gotta be careful using something like Robinhood and following the trends on Robinhood. There's a reason the shorts are so expensive. There is a reason why the institutional investors who are trading warrants aren't valuing them any higher, because that company's value in 5 years might just not be there the way we expect it to be right now. So keep this in mind. If you're a Robinhood investor, I'm not here to scare you. I'm here to show you that we don't even know what we don't know. And let me be really clear. Level 1 knowledge is unconscious incompetence. You don't even know that you don't know. I'm at level 2, which is conscious incompetence. I know that I have no idea. I am not claiming to understand all of this stuff. I don't know if the way I put the pieces of the puzzle together makes sense. I'm not shorting the company. I'm not going to short the company. I'm not going to buy the company. At least at this point, I haven't done any of that, and I don't plan to. I mean, maybe if the company falls to like $10 a share, maybe I'll buy some at that point. But I'll tell you, I'll make a video or whatever. But really, this video is designed to be a big fat warning for you. We have to be aware of how little we're aware of, especially with these spec companies. Final note, it is also very important to recognize that hedge funds hedge things. So even though they're pipe investors and they might have made a lot of profit, they're also very likely to be the people shorting the same stock. So that way they're kind of burning the candle at both ends of the stick, which means if you own Nikola, I'm not recommending that you sell, and I'm not recommending you buy. All I'm recommending is that, or saying is that things could potentially be very crazy or volatile over the next few weeks because of this kind of stuff. We don't know what's going to happen to the price. We just know that some big changes are coming, and there's some big red flags that could signal a lot of pain in the short term for the stock, but that pain could go away, and then the stock could continue to go up. So I have no idea. I just want to put this stuff out there. So if you liked this insight, I really encourage you to smash that like button, share this with somebody you care about, who owns Nikola shares probably, or anybody who uses Robinhood, and consider joining me in my programs linked below. Get your life insurance because you're gonna need it after watching this video because it's stressful. And get your 2 free stocks with Webull when you deposit $100. Thanks for watching, everybody. We'll see you next time.